Hey,
Uh,
it's Friday. It's 4 p.m. What's up, Chris?
it's Friday at 4 p.m., so
Yeah.
it's e-commerce hour time. That's what's up. Let's go. Welcome, everyone to the e-commerce hour from On the Rocks, the show where we talk about e-commerce and e-commerce adjacent information, specifically as it relates to technology and tips to run your e-commerce business. I am Chris Kino. He is Jay Kimmelman, and we'll be here for the next hour or so talking through all those things with you. Last week, we talked about what was going on at Amazon. Talked about some of their new policies, particularly around reimbursements, which will show back up in the news here. We talk about how that might impact you as an e-commerce seller, and then what you can do about it for going forward. This week, with a new president and uncertainty about what's happening next, we're going to talk about how to be prepared for America's favorite topic, Jay, taxes. But before we get to taxes and how you should prepare for them, let's get to the news. This week in tech items, there was a little bit of AI stuff. Nothing super interesting, but here we go. Algolia, who I'd never heard of, but they jumped into the market of launching AI assisted shopping guides. So good job by them. Perplexity, who is a little bit more familiar name, I think. They have added Sonar API, which integrates with Perplexity in real time for helping with developing. Now, I haven't ever used Perplexity, but Jay, I think you probably have. Every time I talk about one of these tech forward things, you're typically in them. So talk to
Yeah,
me about what you think about. Yeah, are you familiar with Sonar API, or do you care about
I
this at
am
all?
not familiar with Sonar API, but I'm actually looking at it over there,
Yeah, sure.
and it's just going to help with
Yeah,
including citations and being
right.
able to customize sources. So, you know, we shall see. I mean,
Yeah,
Perplexity for me is like instead of going to Google, go to
right.
Perplexity, and it is a out um, not an algorithm. It is uh, a conglomeration of multiple searches from multiple sources. So it gives
Yeah,
you like four different search threads to go through. It gives you a much
yeah.
completer thread. I am finding though that ChatGPT as of late is doing pretty well there too.
Oh,
But
good.
yeah, now I'm still going to Perplexity for those uh, higher need searches.
Sure.
So,
Right. Well, and it sounds like with Sonar API, you'll be able to do that if you're trying to build out an API or something like
yeah,
that, where you can, or even if you can integrate into Perplexity, like I need you to search X in my API processing.
right.
It sounds like that's what Sonar is designed to do. So that's a new fun product. Another new fun product that I think is actually really relevant to e-commerce sellers potentially, certainly if you host your own website or you have a website that you manage. Cloudways Copilot for their Cloudways, which is a company, they did this Copilot option, which is an AI service to help detect, diagnose, and support resolution for website related issues. And so I think that's really relevant for e-commerce because if your website's breaking, you want to know why and how to fix it. And I think I know we were having some issues with Adobe earlier today of like it wasn't loading properly or something like that. And so having a tool that exists that can help you to like figure out what's going wrong, especially in something that you're kind of managing on your own, seems like a really great tool. Um, and it can also mean that the people that you partner with that may help with your website, right? They may be able to do that more effectively now and going forward as well. So I'm glad to see this advancement. And again, like we talk about on the show all the time, if somebody's doing it, they're not the only somebody that's doing it. So look out for advancements like this across website platforms and website support services. and
And Cloudways is not the only somebody that's naming their Copilot AI service Copilot. Because as we said last week or the week before, I
right,
mean, I can't count how many Copilots there are right now, including Copilot, the CRM, Copilot, the AI company, Copilot embedded into
within
Microsoft. I mean,
Microsoft, yeah,
those are just off the top of my head. There's three right there.
right,
And now we have Cloudways, and
yeah,
I believe Sage has a Copilot, and
Copilot, yeah.
it's like, all right,
It's just going to be what we all start calling the AI. It's just going to always be
Right.
called Copilot.
Yeah.
Maybe it will become whatever that is, the Kleenex uh, of AI generation or
Yeah.
whatever.
Yep. Yep. For sure.
um, in in other tech related news, Swap, which I don't really know what Swap does, but what they're going to be doing in partnership with Avalara is kind of cool. They're working with Avalara. If you're not familiar with Avalara, they'll come up later, I'm sure. Um, Avalara is a tax support system, and Swap is partnering with Avalara for cross-border tax support. So we've talked a lot here about how that can be really complicated when you get into foreign markets, understanding how that works, and in local taxes and in international markets can be really complex. And so having a partner to help you do that, like Avalara, is a great decision because they do all of that back end research for you. And that Avalara is working with Swap to improve their product. Sounds like a good plan for everybody involved. One other just like super brief note, it's because it was a name I recognized. ChargeBee, which is a company that I've heard about in recurring transactions. So if you have a subscription model, that kind of thing, they can help with the revenue recognition. They have introduced or now are click to cancel compliant, which means that if you've got some subscription and you need to get out of it, or you need to give your customers that option under FTC law, ChargeBee can now help you with that. So I know that's the thing you'd love to be able to do, is to get all your customers on subscription where they're continuing to buy your consumable every whatever quarter or whenever. And so if you are using ChargeBee, you know that this is the case now, and that is a good thing. Or if you're trying to make a decision on who to help you manage those recurring types of things, know that ChargeBee can do that now.
Yeah, ChargeBee is a good solution for doing that payment processing
Yeah,
and to do the revenue recognition. So
right.
it's nice to see that, because in the past you would have to contact support. Hey, I wish to cancel, and then now you're dealing with 50 questions.
Yeah.
I was like, no, I just want to cancel, but
Yeah.
no, cancel.
I heard some wild story actually on a podcast that I listened to about a dog food service, which I think may be an e-commerce brand, where when you called to cancel, they asked in the cancel procedures there was a questionnaire of, do you love your dog? And if you said yes, you went back to the homepage or whatever, and the cancellation program stopped, which seems pretty bad. I think that's why the FTC put this rule in place that you should have this option to click to cancel. So anyway, you could use ChargeBee to help you with that if you need to. And then finally, in the tech related news, we talked about this last week because it had not happened yet. But TikTok, it was shut down. Jay, how sad. Except that for like all of America, it was basically shut down while people were sleeping, and then was back up by the time you were awake. So like nothing happened. And just like we told you this probably wasn't going to be that big a deal. They were going to figure out something, and lo and behold, they did.
But what's really interesting to me, why now all of a sudden are there 4 or 5 suitors for TikTok?
Mm,
You know,
mm,
is this one of those coincidences that it all happened post January 20th? And looking at the names out there, the one that's missing from the list is Elon. Although I
probably
think
good.
behind the scenes he's probably the one most likely to buy it. But it's Larry Ellison of Oracle fame,
Mm.
and Mr. Beast is another
Oh
one.
yeah,
Yeah.
that
So
right.
I mean, what's going to happen there?
I didn't realize Mr.
But
Beast had
but
all that YouTube money, I guess.
right, exactly. But the thing about it is, ByteDance says they'll sell the platform, not selling the algorithm.
Yep, that's a problem.
Yeah.
Because anybody can build a platform. And in fact, I read an article, Jay, about all of the different options that are out there that you could go to instead of TikTok. And holy smokes, are there a lot of them?
Yeah.
There were so many different options. So a lot of people can build that model, right? but it is the algorithm and the way that information is presented to people that I think is where you find the real value in somewhere like TikTok. So um, yeah, it'll be we maybe we should change the name of the show to We'll See, but this is another We'll See situation, right? Obviously, if you do use TikTok Shop and you're selling your product through there, you're back up and running, but you probably want to have just an understanding of what comes next, because if that algorithm changes, it does change the way that your information is going to be served to people, and that means that you have to learn it all over again. So you may want to, at least at the very minimum, explore other options. Things like I saw so many. So the direct competitor Red Note, which is basically the same thing, also directly owned by China, was a very common flocking spot. Obviously, you could use Meta's Instagram Reels. You could do a lot of different things, right? But you want to make sure that you're being thoughtful of that so that you can plan and adjust as necessary if you need to. Should TikTok really shut down in another 3 months or so?
Yeah, and like you mentioned, if they are on TikTok Shop, there are other viable platforms to sell your products.
Right.
Odds are you probably are already on those platforms. You're just using TikTok Shop as a secondary method, and
You would
if you
expect.
come up with additional methods of marketing those products, let's say
Right.
on Reels or Shorts, you can still feed it over to your Shopify site and sell it that way.
Yep.
There's a lot of ways to do it.
Absolutely. And so again, you just be thoughtful about that. Make sure you understand what those ways are. If you're, and especially if you're not in anywhere else, look at it. Consider it. And Jay, that's tech news. In more broad e-commerce news, this one's not directly related to e-commerce, but we've talked about it here several times before, and it will impact e-commerce business owners. And that is that the Corporate Transparency Act went all the way up to the Supreme Court, and there was a ruling. And the ruling was do your BOI reporting, which is, again, what Jay and I have advised you to be doing this entire time. Of course, FinCEN has been like, do the reporting. We'll get you a deadline. We're going to waive the fines and stuff. And so there's a bunch of uncertainty there. But we will reiterate here once again, if this is something that you have not yet done, just do it. It will not take you that much time. You're giving information you've already given. For this particular part of the Corporate Transparency Act, not that big of a deal. So while it remains on hold, know that it probably won't forever, and just expect that you're going to have to do that filing at some point in time.
Yeah.
Jay, any thoughts on that?
I was just gonna say, a month ago, I went and I did a couple of them. Noted it was like less than 15 minutes from start to finish.
Yeah.
You can, if you have multiple businesses, get a FinCEN ID. Makes it super simple. You don't have to enter your personal information, your driver's license over and over. You just have to put in your 10, 12, 16-digit FinCEN ID. And it made it super, super simple. And I believe they even took away the requirement to log in. So
Wow.
It is even easier and less time consuming. So there you go.
So get out there and do it if you haven't already.
Just do it.
Just save yourself the effort and the heartache of potentially having to worry about it later. And again, not directly related to e-commerce news, but I talked about this 2 weeks ago, and it happened again, Jay. There were so many stories this week about retail locations closing, companies going bankrupt. The move to e-commerce is very, very real, and e-commerce owners and businesses, you should capitalize on this continued issue. There's an expectation from I believe it's from NRF that retail store closures are going to continue to outpace retail store openings. So that means that those box stores or store locations, storefronts, there's going to be less and less of them, which means people are going to continue to turn to the internet to find things. Books Inc., which is a bookstore out in California area, they filed for bankruptcy. Bloomingdale's is closing their San Francisco head store. There's just a whole bunch of this kind of stuff happening, and so again, e-commerce is where people people are headed. So if you're you make sure you're positioning yourself to take advantage. Um, in other like U.S. related headlines, right? Right there in the inauguration speech, President Trump talked about 25% tariffs on Mexico and Canada. And then today, I believe it was, maybe it was yesterday, he also talked about a 10% tariff hike on China, with all of those expected to go into place by February 1st. Now, if you're sourcing your goods from these places, you need to be aware of the impact of that, because that is very real impact. If you have not been planning for it or considering it, like, know that it's a thing that you're going to have to manage, and that may mean that you have to increase your prices. That may mean a lot of different things, but know that it's coming, and we don't know all of the details, of course, because it's really just a discussion right now. But something's going to happen, and you need to be prepared when it does.
Yeah, we're going to have a larger discussion on tariffs, I believe, on Tuesday when we're talking on the accounting side,
Yeah.
because it's going to have a bigger impact across the board. And
Right.
just yesterday, the Trumpster was talking, like he normally does,
Yeah.
and he basically told every company that operates outside the U.S. that if they do not start manufacturing inside the U.S., they will be facing tariffs as well. So
Yeah.
basically, anywhere you're bringing products in from will be under tariff. And, the thing about it is, a lot of these companies are in locations because the labor is just that cheap.
Right.
And, the other side of coming to the US is now you're going to have commercial real estate, which goes back to the retail issues.
Mm-hmm.
So you have retail, you have manufacturing. So now you have warehousing space. So now you have rent, additional fees there. And it's just going to keep skyrocketing. And at some point, companies are going to say,
Not worth it.
forget it, I'm out. We're just going to stay in China, pay the 10%, because, let's face it, even if it was 100% tariff, it'd still be cheaper to make it in China than it would be here.
Yep.
And you would probably have a lot of issues hiring workers, because here in the U.S. we don't want to do those jobs.
Yeah.
So, and we have to look at that, and it's great to tout made in America, but we have to have. There's a lot of factors at play.
Yep.
So, go about your business, do what you're doing, keep your eye on the tariffs. Know
Right.
that if you're bringing something in through Mexico or Canada, we're looking at
Yeah.
a 25% tariff, probably starting in a week and a half.
Right.
And China an additional 10%.
Yep.
The president even went as far as saying, hey, there are a lot of cars made in Canada, so he's going to put the tariff on all the cars. And he's like, Canada, if they just become a U.S. state, it would be a non-issue. So I don't know.
I guess we'll find out. We'll see.
See.
We'll see. On this particular one, I think again, like Jay mentioned, for the most part, you're going to just take that tariff, like you're going to pay the tariff, and what that means is that you need to understand what that means to your business, because when you're increasing the cost of your product by 25% potentially, that's going to have margin pressure, and that means that you're going to either have to change the price of your products that you're selling, or maybe not sell the same sets of products. There's a lot of different considerations that you need to make, and that's exactly the reason why why we continue to bring it up here, is we want to remind you to be aware of that, and to know that there's going to be some impact to you, and you want to make sure that you know what that impact is going to be.
And with that margin pressure, you're going to want to make sure you're not paying as much tax as you are. You want to pay the least amount of tax you can. So keep listening. It's coming up in a few months.
Let's go.
We're diving in.
Let's go. Before we get there, we've got just a couple other news items. VHO. Have you ever heard of VHO, Jay?
I recall
Sure.
reading
Yeah.
it. I just don't
Right.
remember.
Yeah, VHO is a like alternative delivery service, an
Okay.
alternative to UPS, USPS, that those kind of folks, and they've introduced a premium delivery service. So I think their previous delivery service was just long, so it just took a while for things to get where you were getting them. Now they have a 5 days or less alternative. So know that if you're particularly if you're in like weird places or that kind of thing, know that this isn't potentially an option for you. Um, and speaking of the USPSJ, there was an interesting thing, the Pony Up Act. I'm not sure if you've heard of the Pony Up Act, but the Pony Up Act is one of the main parts of it. I don't know everything about it, but one of the main parts of it is to maybe potentially make the USPS pay late fees for delayed mail. Now that as a headline is very like eye catching. Late fees for delayed mail. But in reality, what that really means is if you get like a bill or something and you end up having a late fee because your bill was late, that the USPS is going to refund you for your late fee. Um, the only thing that I can think of in charging the USPS for late fees is, man, this is so dumb, for real. Like I just can't even imagine. Can you imagine the headache that would cause? What do you think? What do you
Prove
think, Jay?
it. Prove it. You dropped your mail in the box. It's not,
Yeah.
you know, it does have a postmark on there, but prove it still. I mean, yeah,
Yeah, that sounds like
yeah.
maybe
I
just
mean, unless you're
more
using tracking
posturing.
and paying an extra three whatever, which I
Yeah.
would highly recommend you do, especially when you're paying your taxes. But yeah, I truly don't know.
Yeah. Yeah, I don't know. There were a lot of delivery topics because also in the delivery space, Home Depot, they've started to add, and this actually is in direct competition to Lowe's. They started to add delivery through DoorDash. Lowe's was already there, and so Home Depot has added DoorDash as a delivery option as well as Uber Eats, which both sound absolutely absurd. But I do think it's interesting, this VHO product, the all using these alternatives where people are driving around already, stuff like Instacart, DoorDash, all of those different
Yeah,
types of options. Like it's really interesting to see that continue, because I think that is an opportunity for e-commerce people as well to like consider whether you should be shipping in a different way. Like it's just another option,
right.
and and as we've talked about here a million times, right? You'll find the best one, you'll find the most efficient one, and then over time, what you'll see also is some like price leveling where everything gets to be more affordable broadly.
But
Jay, what do you think about this?
you look at that, like the Home Depot and the Lowe's thing. I mean, it's like e-commerce because you're going on your phone, you're finding
Yep.
what you want, you're placing the order,
Yeah,
and you're in the middle of your project, and then you can get it delivered in 15 minutes.
that's
That's
right.
great.
Maybe with Chipotle or something. Just get the
You
Uber
know,
Eats guy to get them both for you.
or have them stop by the beverage store and pick up
There
a
you
six
go.
pack of your favorite beverage.
That's right.
You know, there you
Yeah,
go.
lots of options there.
Yeah.
So again, I think that's something to explore. Like I don't know exactly how that works for a true e-commerce retailer. Like if you're not going to send somebody out to your 3PL warehouse to like grab the Uber Eats, but maybe you would. I don't know. I don't know. It's just at least something to explore. Um,
Localized, that would work. I mean, really,
yeah, I think
but
so. Right?
you'd have to be super, super localized to
Yeah,
do
I
it.
would have. Yeah, but who knows? We'll see.
Yeah.
It wouldn't be news without Amazon, and naturally, Amazon's all over the news. So Amazon's closing their Amazon Go warehouse in Quebec. So I don't know exactly what that means or even why, but hey, that's happening. They also, in response, almost it seems like to the conversation that we were having last week, they have launched inventory defect and reimbursement portal with the intention of giving you visibility and the opportunity to get updates related to those reimbursements. So kind of the same thing that we were talking about last week. They're trying to make it easier for you at least. So it seems like they're doing a little bit of follow up on their own bad situation that they put themselves in there. And then finally, they've also launched Nova. I've not ever heard of Nova before, but Nova is like a support tool that helps to give foundational models with with the direct intention of using a use case for their customers of support, content generation, data analysis, like all of those different things that we have talked about that Amazon and Meta and all of those folks are doing. Like they're just doing that now all in its own little platform called Nova. So exciting to see that. Again, we've talked about it on here every week. Somebody's doing something new. When they're doing it, someone else is going to follow. So this is really cool to see, and especially out of one of the big players in the space. So good job by you, Amazon.
Yeah,
And then the final.
you mentioned space though. Made me think of Blue Origin and
Oh yeah,
SpaceX.
sure. Yeah.
Now with Elon with his hand in the government now, is he gonna take over NASA and push Blue Origin out and push Bezos out of that market?
Yeah, I don't know. I guess
And
we'll find out.
he's gonna have to keep increasing his investment in technology in Amazon. So
Yeah.
I would expect Amazon to just go diving deep into as much technology as they can because they
Right.
want to be the leader. And I mean, I kind of jest about NASA, but Amazon truly is the leader when it comes to this, and
Right.
the tech that they're putting in place is pretty damn good.
Yep, and it'll just keep getting better, especially with that continued investment. So, like I said, it's always exciting to see that new tech because these big companies are going to be the ones with the capital to be able to do it in the first place. And so
For sure.
you can't have a good product till you have a product, and so it's good to see this happening for sure. And then the final piece of news, there was a new study, and I thought that this was a really, really interesting study. Someone has built a model to figure out, and Jay, I've paraphrased it here, but they figured out how to find which of your products are lousy before they actually go on to be lousy and hurt your reputation. This quality control survey, like this model, uses reviews to highlight for you like some of the review history. I guess it like compiles information. It's called a two-step model of some sort, and so it starts to compile information based on reviews and allows you to know kind of in advance if you've got like something that's going to just blow up your your customer experience, right? So this is a really, really neat study, and I'll be really interested to see like where it goes next. So definitely excited for that.
Wow, that sounds cool.
Right?
At first, I thought you were going to say they built a digital twin of the product so they can do some testing, and find out when it's going to fail to see how lousy it truly is. But
no,
it makes more sense.
that would be
Okay.
no, this way. Right. All right, and then and that's the news, Jay. Now, before we get to talking about taxes, it's beverage time. Jay, what are you drinking today? You drinking water?
I'm drinking water, and I just finished my last cup of coffee for the day.
Yeah. I've been trying to think about a good joke here because I have been doing dry January, but it's like mostly dry. This is which way do I need to go? That way. This is called Nada, which is a non-alcoholic IPA from Community here in the DFW area. And so I feels like maybe it's humid January, where like maybe cloudy January or something like that. I'm not really sure. It's not like raining and actually wet, but it's not like all the way dry. But I'm having a nada today because man, I just get bored of water in the afternoons sometimes.
Yeah.
And I like to sport my little High Rock cup. And then after the IPA, I also have their Pilsner. So we'll get one of those. I got a little sampler pack. They remind me. My wife likes LaCroix and those types of folks. They remind me very much of that. It's like LaCroix, but with beer flavors instead of fruit. So I think that I am interested in it, and I do think like they're only 25 calories, so you could have a couple, and it's like having one regular beer. So it's much more slimming, or whatever. So I may just incorporate those more frequently anyway, because I like to try stuff, and you never know. Athletic, who also makes some non-alcoholic stuff or light or whatever near beer, they also have some that are pretty good too. So That's what I'm doing today. And now on to the good stuff, or the challenging stuff. I don't really know how to start that off, right? We're gonna call this your tax season survival guide for e-commerce businesses, and that's because when you're juggling platforms, when you're dealing with all of your expenses, when you're trying to run your e-commerce business, when you're like, oh my gosh, it's 2025 and it's already March, and wait a second, I have to do what now? Like, this can be extremely stressful. So just your regular job before you even put taxes and stuff on top of it is stressful enough, because you're having to manage inventory, you're having to get product from here to there, you're having to manage fulfillment, you're having to oversee a marketing team, you're having to do all of these different things that already stretch you thin. And so dealing with taxes, disaster, because it takes an expert to be any good at these things. But what we're going to try to do here today is to make sure that you're thinking about what you can do now to ease a little bit of that stress for going forward. And the keys there, I think, Jay, and I'm sure we'll talk about them some more, but the keys are preparing, understanding the different things that you can do, so what strategies even exist. And then if it's not in there, it better be. It's going to be now. Using a good quality advisor, somebody who also has experience in these strategies, somebody who can advise you on the ways to prepare, on the ways to help to minimize that stress. And so
You mentioned it's a disaster. Now, it doesn't have to be if you just follow those three things that Chris mentioned. And, a lot of what we are going to say in the next 25 minutes applies to any business. There are specifics that we're going to hit on regarding e-commerce, but the overall theme, any business, so pay attention. Take it away, Chris.
taxes, they come in all kinds of different ways, right? So what do you need to know? Like, what kind of taxes are even out there? Well, the first one is the one that you think about when you think of taxes. It's your 1040. It's your 1120. That's your federal tax. That's your basic income tax. Depending on your company's makeup, that may be a tax directly on your business, or more likely, it's a tax on you as the owner of your business, and it's based on your income. There are federal obligations, and then depending on where you live, and then also where you sell stuff, a concept called nexus. You may also have state taxes, so you may also have to pay state income taxes. So there's two different components there, right? Federal, state. Depending on the type of product that you sell, and if you're an e-commerce business, you're almost certainly going to have some exposure here, and that is sales tax. Sales taxes are typically at the state level, right? They're not, the federal government does not impose a sales tax, but states and localities do. And those sales taxes can be extremely difficult to manage. So there are lots of tools that exist in the marketplace, and I'm sure we'll talk a little bit more about them later, that can help you to make sure that you're compliant with those different rules. Because where Jay is in the Orlando area, the sales tax rates are one thing. Here in Texas, they are much different. Up in Washington State, it may just depend on which county you're selling in as to what the different rates are. And so sales taxes can be extremely complicated because they are based on how many products that you sell, and you have to hit certain thresholds of volume or dollar amounts, or sometimes both. And so there can be a lot of complexity around sales tax. But sales taxes are taxes on the value of the product, the revenue of that product that you're selling. So an income tax is based on your income. A sales tax is based on the revenue generation from your product. And one final tax that people don't really think about as one that you're paying, because it just kind of feels ingrained right in there. But when you have employees in your business, you're having to pay payroll-related taxes. If you've ever heard the term or the form 941, 941 is the IRS's form for filing your payroll taxes. Each state also has a similar form for their tax collection of their income taxes, as well as the state-related income tax too. So know that these payroll taxes are taxes on your business based on people's wage. So So you got taxes on your income, you got taxes on your revenue, you got taxes on your wages, you got taxes all over the place. Now, those challenges associated with these things are very obvious, right? We talked a little bit about them already when we talked about sales tax, but the biggest one, the one that we see most frequently, is when you're in multi states, both from a income tax perspective and then more critically from a sales tax perspective. You can very easily mess all of that up because it can be extremely complicated to manage multi-state sales tax nexus and all of the different requirements from each state, and all the things that go along with that. From an income tax perspective, tracking your expenses can be really important as well, because you want to associate costs with certain products so that you can say this is how much money I made in these areas, right? And so calculating an accurate cost of sales, an accurate landed cost, and all of the things that go along with that is another area where we often see problems. And that can really matter because here in Texas, actually, if you're operating in Texas, the Texas margin tax is based on your it's not based on your net income, it's based on your margin. And so that's sales minus your cost of sales, and so you need that number to be right, otherwise you're going to pay the state of Texas improperly. And so it's really important that you get all of these different things managed for yourself and taken care of. And so how do you do that? Well, I think the answer is pretty clear. You get good financial reports, right? You use a good quality advisor who can help you make sure that these things are in good shape. And so you'll know, uh, you will have probably seen maybe a P&L statement, right? This is your summary of your revenues and expenses. That's also called an income statement. That language is very cross-utilized, but that statement is the one that helps to identify that income that you're going to be taxed on. Now, oftentimes there's some adjustments that may be made between your book, your profit and loss statements right there in Xero, and what you're actually paying. But for the most part, the basis is very similar. There are a couple other statements that can really matter for you, and the first one, of course, is your balance sheet. And in certain states, you may have to pay. We didn't talk about it, but you may also have to pay property tax. And so, if you're holding inventory somewhere, or if you have fixed assets in a certain state, you may have to pay some property tax on those items. I think I don't know what they call it, the like tangible property tax. That is an exposure, and that inventory number, you need it to be right if you're paying that tax, for both that tax and then also for the cost of sales conversation that we just had. And it's important to make sure that these numbers are right before you submit your taxes, because if they aren't correct, there are a couple of things that can happen. The first one, and the worst one, is that you end up having to pay more once you find out that they were wrong, right? You have to make an adjustment, maybe make an amendment, potentially pay some penalties because you understated your revenues or your income in a prior period. And so it can be really important. It is obviously really important to make sure that you've got all of this correct. Jay, when you think about financial reporting and how that integrates and weaves in with taxes, what are your thoughts on that?
Well, I think it's so important to know where you stand at every point in the year so that you can start thinking about this, you know, in March and April when you've just filed your last year's return, because you don't want to get to the end of December and start thinking about it and start planning for it, because by that point it's too late. The other
Right.
thing, we mentioned, yeah, and we've talked about landed cost a number of times, and it's like making sure you have captured your proper landed cost and you're carrying your inventory at that landed cost to make sure you have the proper inventory valuation, because it is possible you have undervalued your inventory, which means your cost of goods is too high and you're not generating the profit, although you really are generating that profit because it's there. It's just a phantom number, and you have to make sure you're getting that correct, because you don't want to look at that and then what ends up happening, you get it corrected the next year, you have a large swing the other way. So in this case, now your inventory is higher. Now your cost of goods is lower. So now you have a much higher profit. And now there are other factors at play. And now you're paying more tax. And because your profit is higher because you generated more sales, you're paying even greater amount of tax because, as you know, our tax is a graduated system. Unless you're a C corp and you're paying the flat 21 half. But that's one of those things you want to be looking at, and it's truly something that should be on your mind. Close your books on a monthly basis, know what's going on there.
Right.
At that point, look at it, and if you're working with a firm like us at High Rock, we have those conversations. It's like, okay, what's going on? Okay, looks like you've made a $50,000 profit so far. Let's take that out over the remainder of the year. Looks like you're going to have profit of X. So let's start looking at making some estimated tax payments, because
right.
And when those estimated tax payments, that's where the cash flow reports come in. Do you have the cash to make these payments? So
right.
it all comes together. Now,
yep.
we talked about the importance of doing all of this, and I think it's really important that you go through and you have your records caught up. And,
right.
It was a few years ago, it might be more than a few years ago at this point, I had a smaller e-commerce client, and, they were doing back then retail arbitrage. They were going into the Targets, the Walmarts, etc., buying all the inventory they can get their hands on, and then loading it up to Amazon and selling it. Well, they could not remember what they paid for this inventory. They decided it wasn't important to keep the receipts. Some of it was paid with cash. Some of it was paid with cards. So we were able to get some of it, but it took a lot of work going back to trace these purchases. And, when you're doing this and you're buying these things with your personal money, your personal funds, you can't be purchasing personal items with it, because now you're commingling. You don't know exactly how much it is. Well, I can tell you that this one client ended up having approximately $150,000 worth of retail arbitrage merchandise that they had no cost on.
Yikes.
So, it was anywhere from $35,000 to $50,000 that we couldn't account for.
Yeah.
And because of that, they ended up having to pay tax on it.
Right.
Because we could not identify that cost. So it's super, super important. Number one, do not commingle. Even if you have a sole proprietorship for your e-commerce business, which basically means you, the business, one and the same, go and get a separate credit card and a separate bank account for that. So you paid X dollars for these goods. It's right there. It's black and white. And it makes it easier to identify it. And, by doing so, that $35,000 to $50,000 was, what's 30% of 50,000? It was $15K.
Yeah, that's a big hit. That's a big hit.
Could have been $15K that they paid that they just did not know. So it's so important to stay on top of it.
Yep, absolutely. And the good news is, outside of advisors like us that can help you to do that, there's technology that exists that help us to do that properly. And that's the next thing that we'll talk about. Obviously, you want to make sure you're using a high quality accounting software. Our preference here on the e-commerce hour is, of course, Xero. Because Xero can be really valuable and useful for e-commerce sellers. It integrates really well with a lot of different platforms, and then it's easy to use and easy to run reports from. Also, you want to make sure that you're tracking your sales properly and making sure that you're catching the right kinds of fees and all of the things that go along with that. Our favorite tool for doing that, of course, is A2X. We love that tool. If for integrations within Shopify, Amazon, Etsy, wherever it may be, eBay, they're great for doing that. And tracking sales can be really important for exactly the reasons that Jay just described, because you want to make sure that top line number is right, because that may be where your sales tax numbers being generated from. That may be that may go into the calculation that relates to your margin tax in states like Texas. So it's really important to get that right. It's also really important in those situations to use a inventory tracking tool. Xero Inventory Plus is a great complement to Xero, obviously. If you're in the right size range, Jay, can you remind me of what the Xero Inventory Plus range is?
Yeah, it's about 1,500 orders a month. It's definitely on the lower end,
Yeah.
but spreadsheets or that definitely go for Zero Inventory
Yeah,
Plus.
right. Exactly.
And on the higher side, a product like Sin7 Core,
Yep.
would be right there to help you track that landed cost and make sure you're
Yeah,
capturing all of your costs.
which again, Jay just described how it doesn't take very long for that to add up really quickly. It's basically 30% of any cost you can't identify. So really important to manage that properly. And then for sales tax compliance, there are loads of tools out there. The two that we've had the best success with are Avalara. We've talked about them several times, and then also TaxJar. We have a couple clients that use them as well. And it's just so important to use a tool like that to manage multi-state compliance because it is just so complicated. A single individual just will not be able to do it unless you're in maybe one jurisdiction only. So you definitely want to make sure that you're managing that with an appropriate tool. Um, and and these types of tools and this type of technology is really important because it allows you to save time, same as it would an advisor like us that's using that tool. That it helps to make sure that you're collecting the money up front. Sales tax, this is a really important thing because you collect sales tax from your customer. And if you're not charging sales tax, then you're not going to collect it. But when the state auditor comes back to try and get that money, they don't go to your customer; they come to you. And so they'll come to you to collect that sales tax, not to your customer. So you want to make sure that you're collecting it properly upfront, and using a tool like TaxJar or like Avalara that integrates right in with your Shopify or within your other platforms can be extremely important. Jay, do you have any other tools or tech that you want to highlight here today, as far as it comes to
Yes.
managing this?
Yeah, and I mentioned earlier about having your separate bank account for your business. I
Yeah.
highly recommend Relay for that. So Relay is like Xero, built from the ground up for the cloud, and
Yep.
it integrates really well with Xero. And basically, it tracks all of your transactions directly through it, syncs them into Xero, so you can account for it. Now, nice thing on both platforms, you could track the receipts for these purchases. So if you bought $50,000 worth of merch, there it is that you have the receipts for it.
Yeah. You can
Now,
prove it.
you know, business owners tend to forget about their accounting.
Mm.
And now we're here, it's the end of January, and we are sending engagement letters out to the business owners for their taxes. They're coming
Right.
back. It's like, oh, yeah, I haven't looked at my accounting since last March, and, we hadn't done anything for 2024. Well, funny, they bring that up. So a lot of times those bank feeds will break,
Mm.
and you really have to get those caught up. In some cases, the banks will only go back 30 days, 45, 90 days. Excuse me.
Yeah.
The nice thing about Relay, it knows the day that feed dropped. And as soon as you reconnect it, it goes back and pulls in all the data from
Oh, that's
that
great.
time directly to current. So it keeps you current, nice and current there.
Good job, Relay. Thanks for that.
Yeah.
Jay also
So
mentioned, like, yeah. So make
go
sure
ahead.
you're using these tools, right? Were there others, Jay?
Well, this isn't really a tool thing, but it's more of using all of this together.
Right.
So if you set this up correctly, and this is what we do with this, we set it up so that you make a sale, that sale syncs to your accounting software through 80X, through Sin7, through Zero Inventory Plus. That sale is now recorded. You know it's there. So you're tracking your sales all the time. Now, you may not track all of your COGS. There's a number of ways to calculate what your cost of goods is. It's best to do it on an order by order basis because
Yeah.
you're getting the most accurate cost. But by doing this and setting it up to automatically do it and automate this process, you have a head start to have this information. And by doing so, let's say you're running this business and you're tracking your ordinary expenses, you're tracking your sales. You have an idea of what your COGS are. You know what you're paying for it. You don't know the exact dollar, but you can estimate. So in July, you can go in and look at what your 6 month sales were, look at what your other expenses were, and if you're not tracking COGS, I mean, I want you to. So you could just look at your P&L and know what your exposure is at that point, and
Right.
knowing what the history is for the remaining 6 months, you can estimate. But if you don't, you could still look at it and have a pretty good idea of what that number is going to be. And at that point, there's planning that can happen. There are things like making additional purchases for fixed assets, purchasing more manufacturing equipment, things along those lines where you could take advantage of accelerated depreciation. There are other things that you could do, like looking at other expenses, like, man, it's not really an expense, but it's cash flow. Uh,
Yeah.
Retirement funding, things like that, that can help plan that. And by
Right.
doing this in June or even October, you can get ahead of it. Like today, we're jumping in, and it's like Chris said, it could be a disaster. We don't know, but this is when we start fixing it.
That's right.
And it's that June time when, okay, we can really start planning this year and map it out. But it all
Yep.
starts with having those books.
Right. And again, being aware of those things. And so there are a couple different tax deductions that we put together on our agenda here, just to run through quickly, that are often overlooked. Now, I'm some of these I'm not. In looking at them, I'm like, I don't know how that's possible. If you're doing all of the things that we talked about, you're capturing all of these for the most part. But a
Chris,
few.
if you listen to the tax experts on TikTok, they're going to tell you every one of these expenses, and they're telling you you're missing them. If you're
That's
doing the work, you're not missing them. These are
that's
ordinary expenses
that's
in the day-to-day operation of your business.
the majority of them. The first one, not so much, because if you do have a home office and you can utilize a home office and it is appropriate and applicable to you, and there are rules around that. So as long as it's actually a thing that you're doing, like that can be a deduction that you
Sure.
wouldn't have normally captured. But things like shipping costs, advertising and marketing, technology and software, mileage, like you're catching all of those things for the most part. Maybe education and training related to the business if you're doing specific stuff. There may be some deductions around that. But again, if you're doing all of the things that we've already described, so keeping good clean books and records, you're catching most of these. And then a few other things that you can do as proactive steps is start early. So Jay was talking about starting now, starting in June. Now is the best time to do that. You want to be organizing those documents and making sure that you're keeping up to date right now in January. Obviously, uh, I mentioned it at the top, and I'll mention it again, and here it is. But work with a professional. Tax advisors, accounting advisors, they can be critical in helping you to identify some of those deductions and make sure, hey, I do use my home office. Here's how I use it. Is it deductible? How can I do it? What's the right thing? That it can help you to ensure that you're compliant and taking advantage of all of the strategies that you may have talked about. And then, of course, a good accounting advisor is going to help you clean up your messy records. They're going to help you get back on track after your bad 2024. And they can help you to set up a system for 2025 to create new habits like monthly reconciliations or integrating new and effective tools. Like all of those things are something that a good quality accounting advisor can do for you to make 2025 the easiest year that you'll ever have as far as your accounting goes. So there are a variety of things that we've talked about today. We talked about preparing and reviewing reports. We talked about leveraging technology. We talked about reviewing deductions, and then most importantly, we talked about starting early, which is right now. If you haven't started, you're already late. And so So if that's something that you're concerned about and something that you need assistance with, obviously our team here at High Rock loves to do this stuff. It's what we're passionate about, so much so that we're here live on YouTube here on Friday afternoons. This is what we're spending our time doing, is talking about this stuff. So make sure that you're reaching out to us to help you get your time back and back on the right track. If this is your first time watching the show, we'd love to get some comments. We'd love to hear some thoughts and hear some things that maybe some tax stories that that made you really sad, or even if it's just questions about your business. We'd love to interact and engage with you guys. So Jay, before we get out of here, I know your little one went back to school. And I think, if I remember right, your wife is away. So is it like a bachelor's weekend, or are you just gonna go golf all weekend, or what you got going on? What kind of plans you got going on?
There was some thought. I'm waiting to hear from a buddy of mine about at least hitting the PGA store tomorrow.
Oh yeah, there you go.
I need a driver.
Yeah.
And then my other buddy said we should hit the range afterwards. So I got to find out if that's still happening.
Right.
Hoping it is, because based on my effort on Monday, things are looking up, and I think with the right tools, I can
and technology,
get a better score. So I'm really hoping for that. I'm also prepping today. I am wearing my Bump and Run Livecast long sleeve T-shirt, as it is still on the cool site in Florida.
Yeah.
I am planning on doing. I don't know if we talked about it here. I think it was on the other one.
Yeah.
With my wife gone, I could work all week. Well, yeah, it never happened. But working on doing some other podcast stuff this week and posting that stuff up. So that's what I got planned for the weekend.
Yeah.
How about you?
Well, Jay, you might be aware that we're getting down to it in the NFL. This is conference championship weekend. So I'm definitely going to do what I can to watch those games. I think I might get together with one of the other daycare dads and watch the Bills Chiefs game on Sunday afternoon.
Okay, so I have a question for you on that.
All right.
Bills or Chiefs? And now, who do you think? Who do you want?
Bills.
You want
and maybe that's
why?
Well, as a 49er fan.
Okay.
Like a couple years, like 2 of the past 4 years or whatever, we've lost to the stupid Chiefs in the Super Bowl.
Yeah.
So I'm pretty over it. I think both of those stories are interesting. The only team I really want to lose, like really actively want to lose, is the Eagles, because I don't have any interest in them. Yeah, the Eagles, get them out of here. Yeah.
As do I.
Yeah.
Now, I am torn because I would love to see a team three-peat.
But right. Legacy's cool.
I want to see the Bills win.
Yep. Good news. Both of those things can happen.
Right.
One or the other at least has an opportunity.
Right. And I'd love to see Washington with the crappy years they've had win it.
Yeah.
I mean, I truly was rooting for the Lions throughout this.
Yeah. Right. Well,
but
injuries were too much.
We shall see what they do next year.
That's right. We shall see. And you know what? We shall see what we're going to talk about next week, because we do not have that plan just yet. But we'll be back here same time. That'd be 4 Eastern or 3 Central, or whatever, 1 o'clock on the Pacific Coast. We'll be here talking about it. We'll talk about the news. We'll talk about whatever the new tariffs that are about to come out the next day or whatever. All of that. So come join us. Stick around to hear whatever it is we've got to talk about next week, and we'll see you in the next one.
Have
a good weekend, everyone. Bye.
See y'all.